problem. So this is basically the course outline. It is broken down into six parts, okay? Into six parts. The first part is the introduction, the introductory class, where we talk about the basic stage. The second day, we talk about manipulation stage, where we talk about all of the concepts within trading, the retail concept, which comprise of support and resistance, chart patterns, smart money traders, and um, highs and lows, which are also liquidity. And then we also talk about the intermediate stage, which is supply and demand, imbalances, accumulation and distribution. Then the third day of the mentorship is when we'll be going into the advanced stage, which is where we'll be talking about algo, okay?
Okay.
Algo structure, algo liquidity, algo cycle, and selecting POI. This is where we talk about everything about algo structure. And then
Okay.
the day four is basically for entry, okay? We'll talk about the entry models, the entry confirmation, and other confluences, okay? Also, we'll talk about your entry rules, the do's and don'ts, okay?
Okay.
And after the day four, the day five, after we were done with the entries and all that, we'll talk about the trade management, how to manage your risk properly, how to set your stop loss and take profit regarding the algo structure, how to partial out the break-even rules and all that. Still in the day five, we talk about fundamental, the news, the trading plan, and then implementing everything. The trading plan, which is very important, and then how to actually trade news.
Okay.
Then for the day six is basically the finish, the last session, okay? Where we'll talk about the trading psychology, everything about trading psychology, how it has impacted our trading, and what to do in order to overcome some of these factors, in order to master our trading psychology, what to do. And then I have the breakdown of how we are going to go about it. The introduction phase, the introduction, that's the day one, is supposed to last for an hour, okay, an hour and 10 minutes, but depending on how well we understand it. So are you ready for the same thing? Because
Rhino.
we learned together from a mentor. Yeah, we learned from Rhino. So literally we treat like the same thing. Okay. So everything about us is the same. Okay, bro?
Okay.
Yeah. So normally, in the forex industry, there is no holy grail. Okay. There's no holy grail because you looking
Yes.
for
Yes.
a particular strategy that is going to work, okay, is going to take time. So what you do is for you to like get a strategy that has been working for others, you put into practice, you back test, you front test, you study charts, do daily review, daily markups, and then you'll be able to like improve on that strategy and put it to action. Okay, that's when a strategy becomes good. Okay.
Yeah.
So now, actually, Algo will it's going to give you this sense of direction. Okay, that when you open the chart and you just look at the chart, right? You just look at the chart, you'll be able to tell where price is going. Or you get, when you just look at the chart, you'll be able to tell, okay, price is going to fall from this point, or price is going to go up, or price is going to do this. So when you just look at the chart right here, just with a single horizontal line, be able to tell that okay, this is going to drop. So what you're going to do next is for you to like look for ways to get engaged in that trade. Okay. So algo is going to like give you a unique way of looking at the market. Okay. So as we proceed, you are going to get things right. Okay. Slow and steady. Okay. No rush. First thing on the course is how to identify structure and your trends, okay? Because the way we read the structure the objective way and not the subjective
Okay.
way after the other. Now, what is trends? Trend now, how you be able to identify trends is by simply higher high, higher low, lower high, and lower low. The normal way we on, right? That means for an uptrend, want to see higher high, higher low, higher high, higher low, higher high, and higher low. So this is what we want to see for an uptrend. And for a downtrend, we want to see lower low, lower highs, lower low, lower highs, lower low. Now, this is our uptrend.
Yeah.
This is our downtrend, right?
Right.
Then for ranges now, for ranges is when you don't get clear definition of highs and low. Probably you might get a higher high, a higher low, higher high, and then price fail to create a new price fail to create to break this high to give us a new higher high, right? You're right. So now I'm trying to explain ranges, okay? For ranges, you don't get a clear high or low. Price just keeps on ranging, okay? Price keeps on ranging. But if you look deep into this range, okay, if you understand the algo structure and you look deep into this range, you'll be able to see that inside this range, you can get a lot of opportunities to take your trade. Because algo traders, right, they can trade both in a trendy market and in a ranging market. Now, this random pattern that I drew here, okay, let me show you something now. This low is our liquidity, right? Price took liquidity, failed to come and take this high at this point, then price came lower. Now, this becomes a double inducement. We are going to get to that level, how to understand it. So I can take my buy from this level to target this high, okay? And now, right here too, we have this like this, okay? We have this as liquidity. We also have another double inducement. I can also take another buy from this point. And after price takes this high right here, I can look for sell right here. So inside a trading range, right? Inside a trading range, algo traders can catch every move. Can catch this buy, catch this sell, catch this buy, catch it, catch this, catch every move. That's how you see most traders do catch every single move, because just looking at price action, looking at liquidity level, you can get engaged in your trades. I don't know if you understand that.
Okay. I understand.
Yeah, cool. Okay. Now let's look at how we view structure. Okay. How we view structure. Now, I am going to open a chart. Okay. Let me
Okay.
look for a time frame. Now, you know how every single candlestick sounds, right? Where we have, let me use my part two. Now, you see this single candle right here? See this
Yes.
single candle?
Yes.
All of these single candle, right? In order for us to mark structure points, we consider every single candle. If we have a single opposing candle, right, it actually means something in the market. Now, you know how candlestick works, the open price,
Yes.
the
Yes.
close
I
price, and
I
the
I
wick.
know everything
Good.
about candlestick.
Perfect. I love that. Okay. Now, see something now. I am going to mark the structure points from this range right here for you to see. Okay, from this range for you to see.
Okay.
Now, considering every candlestick, right? Let's do this. This was our low, our previous low, right? This was the high. Let me change the color. Hmm, Let me change color. Good. We have this low, we have this high. And in order for us to consider our next structure point, we want to see price break out of either the high or the low. We want to see price break out of the range. Okay?
Okay.
Yeah, good. So let me just draw it out before we look it on the chart. So when we have this, we have this, we have this. Okay.
Okay.
From this high, from this high, and this low. Okay. It becomes our range. Okay. For us to get a new structure point, we want to see price break out of the high. So if price breaks out of this high right here, okay, we want to see a small push down, okay, a little retracement of opposing color, okay.
Okay.
Sorry, let me delete this guy. So as we had this bullish move up and then price made a bearish move, right? Then we now have a new range. This high, we are going to mark this high as our new range, this low as our new low. So inside of this range, right? If price breaks either the high or the low, we get a new structure point, right? So if price should break out of this low right here and then creates a little retracement, we then have a new range, okay? Then we'll mark this low and this high becomes our new range. Okay, now for us to get our next structure point, we want to see price break either the high or the low. We want to see price break out of the range in order to mark the next external structure point. Now, before price should break out of the range, right? If price starts doing this, creating little structure points, right? Creating structure points and then breaks this guy. Let me use this example, sorry. So if price start creating all of these, right? All of these, then it breaks out of the range this way, okay? Don't forget, as price breaks out of the range, it then creates a new retracement. We have a new range. This low, this high, because this high was the high responsible for the break. So this range right here becomes our new range. Now, everything happening within the range, that before the break of either the high or the low, is our internal structure, okay? So all of these, they are internal structure points, okay? So now as price breaks out of this range right here, we now have a new range, which is this high to this low, okay? If price start doing all of this, okay, all of this before breaking out of the range, all of this little move right here is our internal structure, okay? So until price breaks out of that range before we get our next external structure point. Do you understand that?
Yes, I can.
Okay, we will actually look at it on the chart for better understanding. So let's continue the markup of what we're doing. Now,
Okay.
this is our high, this is our low, right? Now, you are going to notice that pure price did. Before it break out of the range, price went up. Remember I said we are going to consider every single candle as a candle movement, because reading every single candle is going to make you understand every detail in the market. You won't be missing a lot of moves. Because now look at this bearish candle right here. Price went down. Okay, price went all the way down to this level, right? And then what did price do? Price created this bullish candle. And a bullish candle signifies that price actually went up. So price went higher to this point, okay? And then it created a bearish candle, right? Now the next bullish candle are these guys, 1, 2, 3. That means price went up to this level, price came down to this level. Looking at all of these black candles, right? Price came up, came back down to this low, came back up, and then we had the bullish, bearish candles right there forming. Price came down. Now this single bullish candle, it actually signifies that price went up. Okay, price made a bullish move and then it came back down, went back up to this level, because all of these candles are bullish candles, okay? Price went all the way up, and then this single bearish candle signifies a structure point. It came down and then it came back up. Because sometimes we can say this single candle here doesn't matter, so we'll mark all of these as our range.
So
Do you know what I'm doing? I'm trying to like tell you how we read every single candle, how every single candle is formed, okay? In the sense that if we have a bullish candle, price went up, a bearish candle, price went down, because we are going to use that to mark out all of our external structure points from here, right, down to where the market is, which is what I started right here. Do you understand that? This
yeah.
is how candlesticks formed, okay? So now let us mark out, let's keep marking, okay? So now we had this high and we had this low as our range, okay? Now what did price do? We are marking the external structure point, right? What did price do? Price came down and then price broke the range. Now, before price broke the range, what did price do? It created internal structure points, because price came back up, came down, came up, okay? This black candle means that price came down. Then price used this candle to break out of the range. So at this point, price broke out of the range. Now this low right here, this low and this low, okay? They now become our internal structure,
Okay.
okay? They become internal structure because they are happening inside the trading range, inside this high and this low, okay? But until price breaks out of the range, everything happening within that range is our internal structure. Okay. So now we are marking external structures only. We are going to come back to mark out internal structure. So we have this right here as our range. Now, as price broke out of this
Can
range, let me save this template. So for bullish candles, we have green, right?
right.
For bearish candles, we have red. You are okay? This okay for you?
Yes.
Okay, good. So green is bullish and red is bearish. Okay.
Yes.
So
Yes.
now let's keep on marking our external structure points. Now we have this high and this low at our range, right? I'm going to use the path tool so you're going to understand. Okay, I picked my tool. So we have from this high to this low, right? And then price went all the way up and broke out of the range. Now price broke out of the range, price came back down, right? As price started this retracement, right?
Right.
This high becomes our next high. Okay,
Okay.
this high becomes our next high. So our new range is going to be this guy right here. Our new range is going to be from this low to this high. Now we want to see price break out of either the high or the low. And now what did price do? From this low, price went up to break the high. Now as price broke through the high right here, right? This low was responsible for the break of the high. And then as price broke the high, price started retracing. Okay. We had an opposing candle, a red candle. As price started retracing right here, we marked this high. Okay. And the low that's responsible for the break. And then we have our new range from this high to this low. This becomes our new range. Okay. And now we want to see price break out of either the breakout of the range before we get our next structure point. Now, let me use the brush tool to mark out this structure point. Now, this is our low, this high, this high, this low, and this high. Okay. Now, these are all external structure points. Can you see them?
Yes.
These are all external structure points. Okay. This high, this low, this high, this low, and then price broke through this previous high, right? Now price started retracing. Okay. Now, what did price do? Price created, see what price did. Price created this low, this high, this low, this high, and then came back down. Now, this right here, all of these structure points is formed right here. It happened within the range. Okay. As it happened within that range, everything within the range is internal structure. Okay.
Yes.
But don't forget, we are marking external structure. So now what did price do? Price came all the way from this high and broke out of this range. Okay. Price broke out and came all the way to this point. And then price started retracing. Okay. As price started retracing now, what we're going to do, we've already marked the high. Now we're going to mark exactly, you're following. If you understand this internal and external structure point, right? You are going to know, you are going to understand this pattern you just drew. Let me draw it out for you. This right here you just drew. Okay? That this is structure and then this is liquidity. Right? This pattern you just drew, right here, it is algo structure. It is all you need to know about algo structure. Everything we're doing, we use this in everything we're doing. This is like the foundation of style. Okay. But
We
then
don't.
before we get
This is not BOS. This.
this is fake BOS.
Okay.
This is fake BOS. This is inducement. This high is through BOS.
Yes.
Through BOS. Okay, good. So now this is the basic, okay? But then before we learn about this, we need to understand a lot of things because without understanding structure, okay? Without understanding structure, we won't be able to tell how to read this because we might be reading this wrongly, okay? But once we understand structure points, we'll be able to know how this works, okay? So
Okay.
let's read structure points for this range before we proceed, okay? All right. How do I delete this guy? Okay. So now we had this as our range now, this high to this low. Before we get our new range, our new external structure, remember I am marking out external structures, okay? Before we get a new range now, we want to see price break out of the range. Now this becomes our structural high, it becomes our structural low. Now what the price do right here? Price came up, came down because we had red candles, came up, came down. So all of these are just internal structures. Okay, all of these are just internal structure. So
Okay.
what the price do? Price came all the way up to this point. This becomes the highest point within the range. Okay, the highest point within the range, and then price came down and broke. Price came down and broke this low. It broke out of the range. Let me see if. Okay, good. Now see something now. This was where price broke out of the range. In order to understand break of structure, right? Even if price break structure by a pipette, that is considered as a break of structure, because on this point right here, this was a break of structure. Okay, it was a break of structure. Yeah. So now what did price do? Price came down and then came to this point, right, and broke structure. So this becomes a new high, and then when it broke structure, it started going up because we had this bullish candle. It becomes a blue candle. So price came up to this level. So now this low right here, this low,
Okay.
this low, and coming down to shape this low and this high right here, and mark that out. This high to this low becomes our new range. Okay, this becomes our new range. So our next external structure, we mark out this high, and then we mark out this low. Okay, now
Okay.
what did price do next? Okay, after price created bullish structure, price came down. Okay, broke out of the range, and when price broke out of the range, it created an opposing candle, right? It started going up. Okay, then we have a new range. Okay, we had this high, and then we had this low, right? This becomes our new range, and we want to see price break out of the range before we will be able to mark our next external structure. Okay, and now what did price do? Price broke out of the range because all of these are bullish candles. Price broke out of the range to this point. So now this high becomes our external structure high. This low becomes our external structure low. Okay, become external structure low. Now, inside all of these bullish candles, now we had a single bearish candle. Price actually came back down, and as price came back down, the high right here becomes our next structural high, and this low becomes our next structural low. Then we have our range. The range becomes from this low to this high, our next structural range. Okay. Now, for us to get our next structure, we want to see price break out of the range. And what did price do? Price came back up, broke out of the range, and then started retracing to this point. Now, when price broke out of the range, this was the low that broke the previous high, and then we had this high because price started retracing. Price started creating a bearish candle. Now, when we have this right here, this becomes our next external structure high, external structure low. This becomes our next external structure high. And then from this low to this high right here becomes our range. We want to see price break out of the range in order for us to get our next external structure point. So far, like, are you understanding this?
Okay.
Yes, you just need an opposing candle. Okay, because remember we count every single candle as an opposing move. Okay, so you see what we had here? What we had here, we had all of these bullish moves, and then as price created this single bearish candle, right?
Okay.
As price started retracing, this becomes a a bearish move. So this high to this low becomes our range, okay? And then price broke out of the range and then started creating this bearish move. And this bearish move signifies placement. So we mark our high and the low. You understand that?
Yes. And what happened
Good.
in between this internal structure? Okay.
Yeah, what happened within the range? They are all internal structure. Correct. That's right. You are following. Yep, you're right. So now this high right here, okay, got taken out at this point. The low was being protected. So see what we had? Price came down all the way to this lowest point and then broke the high right here. Okay. Now as price broke the high right here, okay, price then started coming down because this was the bearish candle. Price started coming down. Okay. Price came down to this lowest point right here. So then we mark this low, we mark this high, okay, and then we place this as our external structure low, external structure high, external structure low. Now, what we want to see, we want to see price breakout. Let me zoom in this chart to understand this part clearly. Okay. But so far, all what we've done, are you following? You understand that? I meant all the structure points, all of this we will marking. You understand them?
Yes, yes, I understand.
Okay. Okay, cool. So now we had this guy right here. This was the low, this was the high. Then price started retracing. Okay. Now when price started retracing, right? This low becomes our new low.
Okay.
This high becomes our high, right? So now
Right.
this right here becomes our range. We want to see price break out of the high or the low to get our next structure point. And then what did price do? Price started coming down. You see, price failed to take the high. Price came down all the way to this level. This was the last low before price came back up. Okay?
Okay.
So when price did this, this becomes our new low, right? Then when price broke the previous high, it started retracing because of this red candle for bearish move. Okay, price did this, this was the high, this was the high. So when price did this, you mark this high right here. So now from this low to this high, we have our new range. Okay, we want to see price break out of the range in order for us to get our new structure point. So now we mark okay, we have to see a retracement because but then when you go on lower time frame, okay, when you go on lower time frame to read candlestick, you're going to see this price went up, came back down. See on lower time frame now, price came up to this level, came back down to this week, and then came back up. So on the lower time frame, this becomes our structure point. Okay, so if we get to types of liquidity, where we have the structural liquidity, inducement liquidity, and transactional liquidity, we are going to understand that on this low right here becomes our structural liquidity, okay, which is clearer on the smaller time frame. But right now, on this 4 hour time frame, for this structure point, price just made all of these bullish moves, and then this was the retracement. Okay, so we just mark this low and this high as our range. You understand that?
Okay.
Okay, cool. Then now we have our new range. We want to see price break out of the range. Okay, now for price to break out of the range, I think this was where price broke out of the range. Okay, then what did price do? Price came down to this last low, broke out, and then we had a retracement. This was the retracement. So we mark this low, and then we mark this. This was the highest point to mark this high right here. To have a new range, this low to this high. And then what did price do? Price broke out of the range, okay? Price broke out of the range, broke out of the low, okay? Price broke out of this side right here. So as price broke out of this side, what we had for the external structure, right? This was the high, price came all the way down.
Okay.
Okay, price came all the way down, broke structure, and then we had retracement, and then it also broke structure right here. So then we mark this low, we mark this high, and then we mark this low right here. So this becomes our high, this becomes our low, this becomes our high, it becomes our external structure low. So don't forget all what we're marking here are all external structure, okay? Because if you look at this high right here, everything happening, don't forget, everything happening within the range, okay, within this range, all of these, they're all internal structure, okay?
Okay.
Cool, cool, cool. And now we had this point right here. And then what did price do? Price started retracing and then broke out of the range right here, broke out of the range, and then started retracing. As price did this right here, this becomes our high. This still becomes our low right here. So we have our new range, and then we want to see price break out of that range. So now you see this low was protected, price came all the way to break out of the high. So now we can mark this high as our next structural high. And then what the price do from this high? Price came down. I think this was the lowest point right here. Price came down all the way to this lowest point and then came back up, broke structure at this point, and then started retracing, right? And then price broke structure to this point. Now we had this right here. This becomes our new low. This becomes our high. This becomes our low, okay? This becomes our high. Now, let's mark out the external structure with dots. We have this low, we have this high, we have this low, and then we have this high. Now, you know, all what we're marking out is external structure, right? If we are to consider internal structure now, see, down move, up move, down move, up move. All of these lows right here, they are internal structure. But right now, I want to make you understand external structure, okay? So that I'll be able to relate it to our algo structure. So now,
Okay.
still marking the external structure, we have a new range from this low to this high. We want to see price break out of the range. And for price to break out of the range, price did this, broke out of the range to this point, and then started retracing. So when price started retracing right here, it came up to this high, and then it broke structure right here, came up to this high. So let's mark it up. Hope you're understanding this, brother.
Yes. Yes.
Good. So we have this right here. We have this low. We have this high. Why are we marking this high? Because price started retracing after the break of the structure. So now we have this low. Where's my brush tool? We had this low right here. We had this high. We had this low. And then we had this high. Now, okay, we're almost done with this. Now, what did price do next? We have our new range. Our new range is from this low to this high, okay? We want to see price break out of the range. And then price came back down, right? And then price
Okay.
took out the high right here. And price took out the high. Remember, all of these are bullish candles. 1, 2, 3, okay? Then price started retracing right here. So we have this. We had, okay, this was the highest point, this high. And then we had this low after a new range. Now we want to see price break out of the range. And then what did price do? From this high, price came down, broke out of the range, started retracing, came back down to this point, started retracing. So now marking the structure points will be this high, this low. Okay, this high will mark this high, and then this low. This is structure point. And now what we want to see next, right? From this high to this low is our new structural range, okay? Everything happening within this will be internal structure until price breaks out of the range, either of the high or the low, before we'll be able to mark out our next external structure points. Do you understand that?
Yeah.
Good. So now, looking at this, looking at all what we've done, okay? All what we've done, all what we've marked, they are all external structure points. Everything inside is internal structure point. Now, how does This help us in trading. Now, in order to spot manipulation, right?
Right.
This guy you do right here, where this is our liquidity. This guy you do right here, okay? We want to see external structure points get taken, okay? We want to see
Okay.
external structure point get taken out before we're able to consider this as a valid markup, as a valid setup. So now, on this point right here, see what's happening. On this point right here, we had this roll move. Let me change the color. Let me use brush. Okay, we had this roll move right here as our external structure. Okay, we had this roll move as our external structure. Then we had this down move, okay, and this up move. What did this signify now? That this right here was a break of structure.
Okay.
Now, at this point, see something, bro. Let me go back to um okay. Let me go back to this. Let me take price to this level. So now, see what we had. See what we had right here. We had this. Let's my annotate. Okay, good. Now we had this low external move, and then we see price coming down, right? Now, what did
Right.
price do later on? Price did this. Went up, okay? As price went up, let me use normal markup. As price went up to this level now. Sorry, I have to clear my chart. I have to
Yes.
clear this. Let me remove all of these joints, okay? So we understand. So we had this up move, down move, up move. And remember, these are external structure. External structure high, external structure low. Now, we don't know what price is going to do. If price is going to keep going up this way, or price is going to take out this. So knowing that these are external structure low, right? Now, as an algo trader, you need to see every high and every low as liquidity.
Okay.
Okay, we see every high and every low at liquidity because for every high and every low to be liquidity, price will definitely come back and take it out. So now, what happened next? Now we can't tell if this is a normal break of structure or if it is a fake break of structure. Okay, until we see what price will do. Now, see what price did. Price came back down. As price came back down right here, we say now this is a fake break of structure. Okay, this low is liquidity.
Okay.
This low is liquidity, okay? This low becomes liquidity. So after the liquidity gets taken, now we want to see a reaction to buy, to go and target
Okay.
this next high, which is our liquidity high.
Okay.
Do you understand why we do this? Good.
Yes.
So let's look at other examples of external structure. Good. Now look at this right here. Look at this. Let me see if this is a valid one. We have from this low to this high, right? Price started retracing. As price started retracing now, okay? As price started retracing, our new range will be from this high to this low. Let's see what price did. Price came down all the way to this point. Now I'm marking just just be looking at what I'm doing. I'm marking external structure only. Okay?
Okay.
See what I'm marking. Price came all the way to this up, okay? Came back down. So that's our new range, okay? We want to see price break out of the range. And what did price do? Price came up here to break out of the range. Now, price broke out of the range. Now, we can't tell if this right here is a break of structure or a fake break of structure. Or we can't tell if this low is a liquidity low or not until it has happened. So now, when we had this move right here, then when price came all the way down to take out this low,
Okay.
this low becomes our inducement, or we call it,
Okay.
let's call it liquidity for now. Don't get to types of liquidity, we understand. Break as a fake, okay? This
Okay.
becomes a fake break of structure, okay?
Okay.
So now after the liquidity, you can look for entry to target this next high,
Okay.
because this next high becomes our liquidity. For short,
Okay.
we call it the true break of structure, okay?
Okay.
So after liquidity gets taken, we can look for entry right here to target the true break of structure. Do you understand this? You understand why we mark external structure, okay?
Okay. Okay.
Okay. So let's see. I'm looking at other examples. Um, for that pattern you drew, okay,
Okay.
this same thing, we work with external structure, only external structure. And in order for you to understand external structure, this exercise we just did right here, where we marked out the range, the high and the low, and if
Okay.
price should break out of the range, okay? If price break out of the range, that's where we have our next external structural high or low, and then everything happening within is our internal structure, okay? That is how we'll be able to mark, we'll be able to tell if price is going to take our external structure or external structure low. Now, see this too. See this. See what we had right here. External structure, right? Price made this
Yeah.
retracement, broke it, right? Price
Right.
came back down, right?
Right.
Came back up, right? Then we had our new range. This high is our range. This low is our range, okay? And before price broke out of the range, price broke out of the low. So when price broke out of the low now, we say, oh, now this is not a fake. This is not a normal break of structure. It is a fake.
Okay.
Okay, it is a fake. And then this low becomes our liquidity.
Okay.
And then as that low becomes our liquidity, this becomes our POI.
Okay.
Okay, this becomes our POI. And then if we refine this POI, let me see. Okay, this becomes our POI. And then this becomes our mitigation of the POI. Then you can take your trade after the liquidity has been taken to target this next liquidity high,
Okay.
or simply put, the true breaker structure. Do you understand this?
Yeah.
Yeah, this is the essence of marking your external structure, because when you mark external structure, you are going to be able to tell how liquidity works. Okay. Now let's mark external structure for this point. Let's do this little exercise before we proceed. Let's go back in time to this point right here. Now let's do this.
Okay.
We had this low, right? This high. In case you understand anything, you can ask, okay, as we are proceeding. We had this. So we had this becomes our range, right? So let's see. Price broke out of the range, right?
Right.
Broke out of the range. We have not seen a retracement yet. We've not seen a retracement. Good. Now, this single candle, this is a retracement. So now we mark this low right here. We mark this low.
Okay.
Now we have our new range. You understand?
Okay.
We have our new range in the sense that this guy, external structure, external structure, external structure. Okay. So now let's see if price breaks out of the range. Let's see. Price broke out of the range. Now this becomes our new high.
Okay.
Okay. This becomes our new high. We'll mark this guy right here. Now let's see if you have a retracement in order to mark our next structure point. Good. This becomes our retracement. Now see how I'm following it. This right here becomes our next structure point. Now we have our range. Okay. We want to see price break out of the range. Let's see what the price do. Price still stalling. You see everything happening like this now. It is internal structure.
Yeah.
Okay. Internal structure. Now we have our break of the range. We want to see a retracement in order to mark the low, right? Good. Right here, this move right here, this guy right here becomes our new low. Okay.
Okay.
Becomes our new low. So that means from this high to this low, we have a new range. Right? Becomes our new
So
range. Now,
this is
normally,
not low. I'm showing you.
hmm?
This is not
Okay,
range.
let me see.
Okay.
No.
Green
Remember, this,
candle.
yeah, green candles, okay? All these are green candles, okay, for this time frame. Okay. It is when we go on lower time frame, we are going to see this. Price came down, up, and then down. When we go on lower time frame. But we are sticking with this time frame. Okay, we are using this time frame, okay?
Okay.
So now we had this guy right here. So inside of the range, we are still inside of our trading range, okay? Now we had this. This was the high that broke this, and then this
Okay.
becomes our retracement. Okay, so this
Okay.
becomes our new low, this becomes our new high. Now you can't tell if we are having a fake break of structure or a normal break of structure because the liquidity has not been taken. Remember, we see every high and every low as liquidity. So now I want to see price break out of the range. Okay, we have this right here. Good. Now this is a news move now. Okay, this is a news move. When price opened now, when price opened, okay, within candlestick, when price opened right here, price came up to this point before coming down. Do you agree with that?
Yes.
Okay, good. Because now when we had this right here, okay, see what price did now. See what price did. This low becomes a fake break of structure because when price broke it, price came up and then took out this point. So this becomes our liquidity. So as this becomes our liquidity, what is price reacting to? Price reacting to this candlestick wick. Price reacting to this candlestick wick. So now as price look at this low, try to look out this liquidity right here. You can get your trade from here to target the next liquidity level, which is this low right here. So you see, when you keep on marking external structure, when you keep on marking external structure, you are going to understand how price do take liquidity before moving. Okay, instead of marking, let's say this whole range, and then we add this. Now we consider every candle. Okay, so
Okay.
you understand how external structure work, right? From the markup we've done, you understand them, right?
Yes.
Good. And what we did is simply the objective market structure. That is how we view the market. Okay.
Okay.
Because for a true uptrend, we see
Okay.
this. Okay. We see all of this. For a true uptrend, price keep on manipulating lows, taking liquidity to push up. Okay. It, it is this right here they will just get higher highs and lower highs,
Okay.
all of these higher high and higher lows. This is the subjective way of viewing market structure. And we don't look at it this way. We
Okay.
look at the structure this way. Because when we look at the structure objectively, this is when we'll be able to like know when liquidity has been taken to take our trade, know when liquidity has been taken to take our trade, know when liquidity has been taken to take our trade. Do you understand?
Yes.
Yeah, good. Now that is how we mark external structure and internal structure. So even without going deeply into the internal structure, just know that within our range, just know within our trading range right here, before everything happening before the break of the range
Okay.
is our internal structure. All of
Okay.
this internal structure. Do you understand that?
Yes.
Good. Now, now you see how now you see how I did the markup of the external structure where I use the path tool, this tool right here to understand them. I use
Yes.
the horizontal tool, then I use the dots, okay, the brush to mark
Okay.
out the external structure point, right? Good,
Right.
good. So now this is 1 hour 8 minutes. The class this first stage is 1 hour 10 minutes. So we have 2 minutes. And we've talked about the external internal structure and we did
Okay.
lots of examples. So now
Okay.
the way I did that markup, right? You are going to do an assignment. Okay?
Okay.
You're going to do an assignment. What currency pair do you trade? Euro USD? Hello, brother. Do you
Yes.
trade Euro USD? Do you trade
Yes.
Euro?
Yes.
Okay,
Yes.
cool.
Yes. Yes.
Okay, cool. So now on the 4 hour time frame, right? On the 4 hour
Okay.
time frame,
Okay.
you are going to do this for me. Let me do this. You're going to do this.
Okay.
Okay. From August 11, 2022
Okay.
to October 8, 2022. I'm coming. I want to write it down. Let me
Okay.
write it down.
Okay.
Okay, I'm coming. Let me write it down. August 11, 2022
Okay.
down to October 5th, right?
Right.
October 5, 2022. Now, this is one page, right? This is one page. We are going to mark out the external structure, okay? Just like how we did in the session.
Okay.
We're going to mark out all of the external structure.
Okay.
This will be on one page. on the
Okay.
4 hour time frame, Euro USD. Okay,
Okay.
this will
Okay.
be okay. So this is one.
Okay.
Okay, let me look for the next one. This is one. The next one, let's go a little bit back. Still 4 hours time frame from February 22nd till 2022 down to April 30th. Okay,
Okay.
February
Yes.
22nd, 2022 down to April 20th, 2022. Now, still the 4 hour time frame, you're going to mark out external structure points, just like how we did. Okay. Now, you're going to do 5 pages so you understand it better. Okay. Okay, good. Still on the 4 hour time frame, July 20th, 2021,
Okay.
down to September 29th. Let me write it down. I'll send them to you.
Okay.
July 20th, 2021, down to September 29th, 2021. Okay, this 2021. Okay, good. Now, this I'll give you three, right? So now
Yes.
on let me go back. Now, good. Let's go to the 1 hour time frame. Good. We are going to use 1 hour time frame. Yeah. Now, for the 1 hour time frame,
Okay.
we do this page from May 27th
Okay.
to July 11th, 2021.
Okay.
Let me write it down. It will do 1 hour. May 27th, 2021, down to June 11th, 2021. Okay,
Okay.
2021. Then one more page, and that will be the assignment. This page is going to be recent price action. It's going to be from January 11, 2023, 2023, down to today is January 29th,
Okay.
January 29th, 2023. Good. So now you see all of these dates, I'll send them to you on your Telegram. All of these dates right here, you are going to mark external structure points. You can just convert them to image because there are going to be like 5 pages. The first
Okay.
one, these dates, uh, these ones are the 4 hour time frame. This is the 1 hour time frame on EU.
Okay.
So when you do that, you can convert them to, yeah, you can convert them to PDF and send to me
Okay.
whenever you are done. So what we are going to
Okay.
review it, we are going to review it in our next session. Okay. And don't forget, since you're recording, you go over it. Okay. Go over it
Okay.
so you understand it better.
Okay.
Okay. That is cool. That is cool. Yeah. That brings us to the end of the basic stage, end of the first lesson. Okay. First Zoom session.
Okay.
Our next session today is today is Saturday, right? Good. It's
Okay.
supposed to be two sections per week. Okay. So seeing this introductory section, our next session is going to be on Tuesday. Are you comfortable with this time?
Yes. Yes.
Hello, bro. Yeah, you're comfortable with it, right?
Yes. Yes.
Okay, cool. So our next session is going to be on Tuesday, same
Okay.
time.
Okay.
Yeah. All right. Let me save it down. Next session will be on Tuesday,
Okay.
I think it is 7:30 my time. 7:30 my time. Yeah.
Okay.
Yeah. So this is going to be our next session on Tuesday, which is 12 o'clock midnight, your time. That will be our next session. So you can do the assignment before the next session. And if you want to do more for you to understand the chart, you can do more and
Okay.
send. I'm going to look through it. Okay, brother?
Okay. Okay.
All right. All right.
I
And
will
try to be
send you
available.
GBP
Yeah.
USD also.
All
My
right, no
chart.
problem. I like that. I like that.
Okay.
I like that. That's good. That's good.
I'll
All
share.
right. Um, take care for yourself, bro. Have a great day, all right?
Okay.
All right, bye bye, bro.